Hey everyone, welcome back to the channel. Today we're talking about Opendoor, one of the most talked about stocks in the real estate and tech sector. The stock had a tough trading day, dropping more than 11% in a single session. And in this video, we're going to break down what happened, why it happened, and what could be next. But before we get into the details, make sure to hit that like button and subscribe for more stock market updates. So here's how the day played out. Opendoor closed at $3.21 after hitting a low of $3.06 and a high of $3.63. The volume came in at about 233 million shares, which is lower than the average of 342 million, but still a very large number. When you look at the flow of trades, the secondary market showed a lot more selling than buying, which tells you investors were mostly cashing out. On the dark pool side, it was a little different. Hedge funds and shorts were very active with some big block trades, including one massive trade of 3.8 million shares. One thing I've noticed is the heavy presence of smaller trades that look like algorithmic trading. These bots tend to keep the stock price suppressed. What's missing is retail or institutional buying, and the reason for that is simple. Everyone is waiting for the next catalyst. Right now, that's the CEO announcement. Rumors suggest it might be Travis, which makes sense logically, but nothing is confirmed yet. And without leadership clarity, it's hard for investors to stay confident. This is why many people are treating Opendoor almost like a meme stock, with random posts on social media predicting crazy price targets like $8 or $10 without real data behind it. That uncertainty really hurts credibility. Looking at shorts, they increased positions by about 1.19 million shares today, bringing total short interest to 23.5% of the float, or roughly 154 million shares. For several days, shorts were covering, but now they've flipped and started adding again, which shows renewed pressure. In the options market, we saw around $31 million in call volume compared to $10 million in puts, but 61% of all options trades today were bearish, especially early in the session when fear was highest. Bulls are betting on a range of $3.50 to $4, while bears are looking for a drop below $3. Open interest also shows heavy positions at the $3.50, $4, and $5 strike levels. If the stock somehow closes above $5, that could trigger a strong gamma squeeze, but that's more of a best-case scenario for bulls right now. From a technical perspective, Opendoor closed between its pivot and resistance levels today. Resistance now sits around 3.49 and 3.87, while support sits at 2.87 and 2.26. The stock is still trading above its key moving averages, including the 50, 100, and 200, but it's looking overbought. That explains today's sharp pullback. A reset into neutral territory might happen tomorrow, especially with new economic data and Walmart's earnings report set to come out. That could bring even more volatility. The bigger picture here is that Opendoor is in a very unusual position. On one side, it's got a disruptive business model that could really take off if housing stabilizes and interest rates fall. On the other side, without strong leadership and a clear strategy, it risks being treated as nothing more than a momentum play or meme stock. Wall Street often undervalues innovative companies, but hype alone won't keep a stock alive for long. Investors need something concrete, whether that's a new CEO, stronger earnings, or proof of business growth. For now, all eyes are on the CEO announcement. If we get news this week, it could act as the spark for the next rally. If not, the uncertainty may continue to weigh heavily on the stock. So, what do you think? Is Opendoor just another meme stock right now, or does it still have real long-term potential? Do you think retail investors are giving up, or are they waiting for the right moment to double down? Let me know your thoughts in the comments below. Don't forget to like, share, and subscribe for more updates. Thanks for watching, and I'll see you in the next video.